All right, good evening, everyone. Welcome back to Market Wrap with Arjit Kar. Today was a brutal session in the market. Sensex crashed over 1,000 points intraday. Nifty slipped to 23,815, and Nifty continuously saw pressure throughout the day. And but here's the main important point. All right, despite all this heavy pressure in the market, the smart money quietly moved into FMCG and commodities sector. So, in the next 15 minutes, with the expert, SEBI-registered expert, we will be covering what actually moved in the market, what retail investors missed in this particular market, key levels to watch out for today, and what opportunities that might still exist. So, Arjit, thank you so much for joining us, and let's get started with today's session.
Sure.
Can we
Thank you so
give
much for having me.
complete overview in the next 90 seconds, please?
Sure, definitely. So 90 seconds timer on. So thank you so much for having me first of all. And let's quickly look at what really happened in the market. So if you look at Nifty, Nifty closed with a huge loss of 1.5%, around 360 points down at 23,815. Similarly, if you look at Sensex, Sensex was also down around 1.7%, loss of 1,300 points at 76,033. Obviously, provisional closing and final closing, there's some difference of like 10, 20 points. But broadly, this is what happened in the market. Markets were down 1.3, 1.5, 1.7%. Talking about the top gaining and top losing sectors, you look at the healthcare, pharma, FMCG, as you rightly said. These were the only top gaining sectors in the market today. Healthcare was up around 0.45%. Pharma index was also up around 0.25%. And FMCG was barely surviving with gains of 0.8%, 0.08%. And if you talk about the losing sectors, you talk about it. You have auto, bank nifty, consumer durables, media, realty. All of these sectors were among the top losing sectors with a minimum loss on the index level at least 2%, 1.32%. So broadly, this is what is happening in the market. Bloodbath everywhere. Everywhere you look at all the stocks, almost everybody is in the red in the markets today. People.
That's right. But why do you think this major fall happened today? What was the main reason behind it?
All right. So if you talk about the main reasons for the fall, like what's really happening in the market, I would divide it into two parts, right? Because if you look at the charts, the markets are falling as well. They're coming down at the support level and then they're rising again to the next resistance. So market was falling as well as there was some recovery in the throughout the day in the markets. So I'll divide it into two parts. First reason, why was there a fall in the market today? Right. So for the fall, there are 3 to 4 main reasons. First is if you look at Brent crude, crude is once again near 110 and 107 US dollars. Session which was on Friday, Saturday, we closed at around 0.3, $0.4. Sorry, 103 and 104 US dollars for Brent crude. And now in today's session, when we open in the morning, we open right with a gap of 4% at 108. Right. So that is our first reason why the markets were under pressure. And to be honest, if you look at crude, crude is acting like one of the major 2 months ever since the war has started, right? So crude is the first reason. Second, you look at the war, there's nothing much happening in the war either. There's no positive relief for either of the countries or either of the sides or either of the countries globally with respect to war. Things are escalating once again. Things were all well. Things were chilled out for the past 2 weeks, but now things are, getting hot again between both the parties, right? So that's point number two. And thirdly, if you look at one of the most major reasons, is the yesterday's appeal that PM Modi made to its citizens in the Hyderabad rally. The primary reason, the primary appeal was not buying gold for at least next 1 year, avoiding the use of petrol, diesel, CNG, and all of those natural resources, and implementing work from home and like avoiding all of the unnecessary travels. You talk about, you have foreign travels or national level domestic travels, any kind of travel that would increase the consumption of natural resources like crude or you say petrol, diesel, CNG. PM Modi's appeal was to avoid all of that. And on top of it, apart from all of this, we also had avoid any foreign imports or foreign purchase of goods and services. You have to avoid all of that as well. Now, avoiding foreign products and avoiding buying foreign products, that was not a major trigger. The major trigger was when PM Modi said that you have to avoid buying gold for next 1 year. See, gold is considered as a safe haven by the Indian consumers. Almost everybody would buy gold in the families because they consider gold as safe. If something goes wrong globally or if something goes wrong in the country, you would use gold to safeguard yourself against any of the uncertainties that are going to come. If you talk to the citizens and you are like, you don't buy gold, you're basically asking them not to buy their safe haven. That is why there was such a panic in the market, and that is like one of the most major reason why we opened with a gap down and we were in the range today, right? So this was all about why did we see a fall in the market today. The second part of it, we saw a rally, a small short covering throughout the day. If you look at these three green candles, they took us from 23,850, our marked support, to the next resistance level of 24,000, again our marked level. So the market was trading in that level. But what was the reason? Why did we see the short covering? The first reason is because crude. Again, crude is up, 4% up at 108, but it's not crossing 110. 2 weeks ago, we were at $120 for crude, and that was when the panic was setting in. Indian markets were rising as well, and crude was rising as well. This does not go hand in hand. Crude has an inversely proportional relationship with the Indian market prices. So if crude is rising, our markets have to fall. So crude gave us a 4% gap up, our markets gave us a gap down. But because crude was below the major resistance of 110, that is why we saw a little hope in the market throughout the day. Apart from that, there was also another technical point to it that we were near key support at 23,850. Short covering was obvious at such points. So yeah, these are the main reasons why we saw the movement in the Indian market today. Sripadavan.
No, I think the same reasons would apply for Reliance Industries as well, right?
Definitely. So Reliance Industries, if I would just load up the chart over here, for Reliance Industries Limited right over here. So, quick disclaimer, Reliance Industries was a part of our recommendation earlier, and you can see that the targets were hit already. So, if you look at Reliance Industries, so Reliance Industries broke its important support of 1400 rupees, which was marked earlier as well, which I just removed the drawings. So 1400 was an important level for Reliance Industries, not just on an hourly time frame, but if you look at 1 day time frame, which is considered for long-term investment perspective, say for 2, 3, 4 weeks or maybe 6 months, you can consider 1 day time frame for that. If you look at 1400 rupees, for a very long time, Reliance Industries has been hovering around this level. Majority of the times, Reliance Industries are around this level. Breaking this level, then you have the most important level on the downside, that which is its 52 weeks low. Now, if Reliance Industries enters this range, then we are expecting Reliance Industries to underperform other stocks in the market. That is why Reliance Industries was in focus today, because this thing is very major, because Reliance Industries is like a heavyweight for Nifty. Everybody considers Reliance Industries as a stock that would move the index. So if Reliance Industries is moving, Nifty is supposed to move with it. It is supposed to drive Nifty ahead, and if it's falling, it is supposed to take Nifty down with it. Same is the case for HDFC Bank as well, but HDFC Bank is not near its crucial support zones. Reliance Industries is approaching its important, crucial, tight consolidation zone where it would struggle for the next 2 to 3 weeks. And if all of this is true, and if it goes as planned, then Nifty 50 will enter a very tight range for the upcoming weeks, which is a big concern for retail investors like you and me, and again a lot of HNIs as well. Keep it up.
Got it. Now, talking about the heavyweights, we also saw a huge fall in SBI, which resulted in a drop of the Bank Nifty. What's your commentary on the same?
Right. So SBI again. Quick disclaimer was again a part of our recommendations as well on Zdvisor's app as well. So SBI again, you can see that a huge fall was there. Three big candles for the last three trading sessions. The reason around this is simple: weak results, weak guidance, and absolutely horrible balance sheet. These are the three reasons why SBI has been falling. And historically as well, if you look at the previous data, if you look at the rally here, I- the last quarter, right? January quarter, when the results came in for December quarter, you saw the rally in January, you saw the rally in February. And at that time, everybody was talking about SBI. Everybody wanted SBI in their portfolio. And now when the results have corrected themselves, when the things are now, they say that either when something goes wrong with the stock, either time will correct the price or time will correct its balance sheet. So time did correct the balance sheet, but time did correct the stock as well. And that is why we are seeing a huge fall in SBI right now. I don't think this is like something major to, like a red alarm. It's not like an alarming situation for SBI right now, but it's concerning. If you have SBI in your portfolio, you should be concerned and you should have a strict stop loss near 961 rupees, because that is like a support level historically as well. December we saw major support from that level. So 961 is a level that you have to wait and watch for. If that level is breached, please exit SBI. Do not make any fresh positions there. There's no point holding a stock which cannot perform fundamentally. Doesn't matter if it's a large cap company, doesn't matter if it's a small cap or mid cap. If the fundamentals are not good, and if the price is not supporting the fundamentals, then you should probably absolutely avoid that particular stock.
Got it. Now, if you're looking at the market today, throughout the day, everybody focused about the negativity. Where do you think the smart money flew today? What was the real opportunity that anyone would have grabbed?
Okay, that's an interesting question. Now, for people who are smart, especially our users, so everybody heard about the entire address that PM Modi gave yesterday, right? He talked about avoiding gold. He talked about using public transport and using other methods like carpooling instead of taking your own vehicle out on the road, right? These, just if you look at these two factors, you would find the right opportunity therein. Avoiding gold, if you are somebody who trades FNO, if you're somebody who's interested in making money by shorting a particular stock or shorting a particular company, you would see a huge opportunity in Kalyan Jewelers. Look at the fall here. Again, disclaimer: Kalyan Jewelers was among one of our recommendations earlier. Kalyan Jewelers, you see this one single red candle. If I can open it on the 1 hour time frame, you would see here single day fall of 10%, almost 10%, 9.27%. You look at other stocks like Tanishq. Okay, Tanishq, I believe, is not listed. But if you look at other, you see jeweler, just type in jewelers and you'll see all of the good PCJ, another stock, 5% down. So you look at all of these stocks and all of these sectors that the PM Modi has talked about. The first we just saw, the jewelry sector, the gold stocks are down. You talk about public transport. Public transport mein, the most active company from the stock market that gives out buses or transport services to government is Olectra Green Tech. So if you just look at Olectra Green Tech, a little background for people who do not know, Olectra Green Tech supplies all of the EV buses to not, I guess it does it for the Mumbai, for the Best Corporation, and it does for several other states as well. So you look at Olectra Green Tech, 3% up today, just one single candle. If you would have taken a trade in Electra Green Tech today morning, you would have made good money over here. Similarly, PM Modi also talked about logistics. So if you look at logistic companies like Blue Dart, you take TVS supply chains, all of these stocks were also down because he talked about the potential hazard that we have, or maybe the way we have to be cautious around shipping our stuff, right? Logistics was also under question, and gold demand was also under pressure after the entire address of PM Modi that happened yesterday. So gold, logistics, these were the two opportunities that you got to short and make money. And if you want to buy the particular stock, or if you're interested in going long in the markets, you already had the opportunity in Olectra and JBM Auto in today's trading session. People.
Got it, got it. Now, I understand that most of the sectors currently are in red, but if you have to pick one sector going forward to watch out for this week, then which one would it be?
I think one sector that I have to pick, and I've been picking this sector from a very long time already. So I believe pharmaceutical sector is something that I would pick, and again, pharmaceutical sector pe we already had a view on Zdvisor's app today. Pharmaceutical sector, the entire index, pharma index, is at a 19-month high. If I can just quickly load up the chart here, pharma indexed. Nifty Pharma Index right here. Right now, what you're seeing on the hourly time frame is a consolidation at higher levels. But if I would just zoom out of this image, if I would just load the 1 day time frame and just zoom out here as well, you would see it's at its life almost at its life high level. You look at since 2020, 19, 20, 21, 22, 23, last 5 to 6 years, it's at its all-time high, right? So pharma index is something which I would pick even at the current levels, and I have to pick if I have to pick one stock out of this entire sector, pharma sector, I would pick MCure Pharmaceuticals. So let me just quickly load MCure Pharmaceutical stock here over here. So if you look at MCure Pharmaceuticals, currently trades around 1685, 1670. Right now, it's under a tight consolidation with a long bias. So it's with a bullish bias, and it's in a consolidation. If you have to buy MCure Pharmaceutical from current levels, I would suggest at least have 5 to 6% target. So I would say have the last target, the third target that you should have is 1798. The first target that you should have is at the first resistance, that is 1709, and somewhere in the middle right here where maybe the stock would rise and just consolidate that over here, that would be 1754. And always remember, whenever you take a trade, you have to take it with a strict stop loss. So we would maintain a 1 is to 1.5 risk to reward, and we would put our stop loss at 1584. So MQR Pharmaceutical is one stock that I would pick given the current condition of pharmaceutical sector, given the fundamentals of MCure Pharmaceuticals, I would say MCure Pharmaceutical is the best pick for from pharma sector for today's session for the users. People.
Great, great. Now let's look at the open interest. While we are there, we'll also look at the major levels to watch out for tomorrow for Nifty and Sensex as well.
Right. Unfortunately, the tool that we used to use for open interest is it's currently facing a downtime. But I can definitely tell you guys, if you just look at the technical levels of Nifty 50, there are two important levels that you have to mark between these levels that we have marked already, right? So you see Nifty 50 today closed at 23,820, right? But if you look closely here, there's one support level at 23,800. We did take a support from 23,800 during the day today, but 23,800 is like an important level for us because see, for scalpers, for swing traders like us who look out for opportunities for say 1 to 2 weeks, for us the important support level was 23,850, which has been broken already. But if you look at people who take trades for say 2 to 3 months or they have a positional view on the index, for them the support level is 23,850 because earlier as well, if you look at the previous rallies and if you look at the previous data, 23,800 acted as an important level historically. Earlier it was a resistance, then it became a support, and even now it is acting as a crucial support because we took support from that level intraday today, right? So 23,800 on a closing basis is one level on the support side that you have to look out for. And if you look at the higher end, I think 24,150 is a level on the higher end that you have to watch out for. Why? Because we saw a gap down today. Let me color this green so we don't confuse it for support. Right. So we opened with a gap down today. The gap down was over 1% down, right? That is why if you go up now, if we start a rally, maybe we cross the first level, we cross 24,000. If we go up, the next resistance point, the level that would not allow the markets to rise further, would be 24,150. Because on the last session we closed near 24,150, which was our support level for that particular day. We broke that support and we went below at least 1% down and we opened below 24,000. So that is why 24,000 is a crucial resistance, but the second most important resistance would be 24,150 for the upcoming trading sessions.
Great, great. Awesome, awesome takeaways from this live session, Arjit. Thank you so much for doing this for us. And for the viewers, if you find this very useful, please subscribe to our channel, share it with your friends, and also tune back again tomorrow exactly at 4:30 p.m. Thank you so much.
Thank you.